Welcome to Real Estate Donation Academy. In today's video, we are taking a focused look at the qualified appraisal, generally required when donating real property to charity and claiming a deduction of more than $5,000. And let's start with one important point. Broker price opinions, broker opinion letters, and county assessor values do not satisfy the IRS qualified appraisal requirement. If a real estate donation appraisal is done incorrectly, the donor's deduction can be put at risk, and the appraiser's report may fail the IRS requirements for a qualified appraisal. While many of these requirements are similar to standard appraisals completed routinely by experienced appraisers, charitable gift appraisals have specific IRS timing, content, and qualification requirements that go beyond the standard assignment. First, a word to the donors out there. Before spending hundreds or thousands of dollars on an appraisal, make sure the appraiser receives our appraisal guide, which you can download free using the link in the description. Just as important, confirm upfront that the appraiser is willing to sign IRS Form 8283 after delivering the report. If the appraiser will not sign Form 8283, the appraisal will not work for deduction purposes. If the claimed deduction exceeds $500,000, the donor must also attach the qualified appraisal to the tax return. The donor should generally be identified appropriately in the report as the client or intended user, not the charity. Timing also matters. A qualified appraisal generally cannot be signed and dated more than 60 days before the date of contribution. If the contribution date is more than 60 days after the report would need to be updated, usually for an additional fee. If the appraisal is prepared on or after the contribution date, the valuation date should be the date of contribution, but the report may be prepared and dated up to the date the donor files the return for the donation year. The donor also needs to disclose all known facts that may affect value. That can include leases, easements, use restrictions, title problems, access issues, occupancy arrangements, environmental concerns, or other conditions affecting the property. Let's take a moment to step back. This is why these donations matter in the first place. Now, let's get back to getting this appraisal done right. For the appraiser, a compliant IRS gift appraisal is not much different from other real estate appraisal assignments, and it should be prepared in a manner consistent with the substance and principles of U.S.P. But the IRS also requires several specific items to appear in the report. First, the report should clearly state that it was prepared for charitable contribution substantiation for federal income tax purposes. Second, the report should include the appraiser's name, address, and EIN or Social Security number. Third, the report must include the required IRS appraiser declaration. This is a statutory requirement, and appraisers should copy and paste this one paragraph verbatim into the report. The exact text is included in our appraisal guide and in the description for this video. Other required items include the method of valuation, full description of the property and its condition, and sufficient market support for the opinion of value. And if the donor places a restriction on the donated property, the fair market value must reflect that restriction. The appraisal fee also cannot be based on a percentage of value. Lastly, the appraiser must be qualified. For IRS purposes, that generally means the appraiser has either earned a recognized professional designation for the type of property being valued, or has completed relevant coursework and has at least 2 years of experience valuing that type of property. The report should state those qualifications. The IRS does not issue its own designation and does not keep a list of approved appraisers. The takeaway is simple. If you are claiming a deduction of more than $5,000 for donated real estate, you generally need a qualified appraisal, prepared within the required time window by a qualified appraiser. And the appraiser will typically also need to sign IRS Form 8283 after completing the report. We hope this overview helps both donors and appraisers avoid costly mistakes. For more educational resources on real estate donations, charitable tax strategies, and IRS substantiation rules, follow Real Estate Donation Academy.